slides just introducing the topic tonight and also going a little bit into what Marketfy is. So we're going to do that while everybody else files in. We still got a ton of traders showing up right now. I asked a question in the chat just a second ago. How many of our traders here tonight made it to all 4 live webinars? You will get the recording for tonight and the rest of the webinars from the week in just a few hours. Many of you have already seen the recordings from the previous nights. Monday, we did the psychology of trading with Sanglucci. Tuesday, we did the using candlesticks to trade wedge and flag patterns with Serge Berger. And last night was how to pick credit spread levels, talking about 90% probability trades with Nick Shaheen. So all of those recordings are currently available. We will send a link out to those, plus tonight's Trading the Wide Open Spaces in Forex by Scott Barkley from ProAct Traders. Him and his partner Jerry Rankin are a couple of really good friends of mine. I met these guys about 2.5 years ago now, 2 years ago at a money show out in Dallas. We immediately hit it off. They are incredible guys, and they are incredible traders. And their trading room, where they're helping people trade Forex, is definitely one of the best, and we are happy to have them on Marketfy. But real quick, before we get into everything tonight, like I said, we still got a ton of people showing up. I want to go over Marketfy, and I've had an incredible amount of feedback, emails, phone calls. I just got off the phone with somebody before we got into the webinar, who's Tom. I'm sure you're in here right now, and I am elated with all of the feedback we've gotten. Marketfy is the only store, the only marketplace out there for the web's best trading courses, newsletters, and chat rooms. What we did was we wanted to stop all of the crummy newsletters, the snake oil salesmen out there, by creating a place, a transparent marketplace where you could come, understand and trust that all of these products are verified and audited, and then you can purchase from them knowing that you got the brand of Marketfy and our parent company, Benzinga, behind you, knowing that we're going to give you your 30-day money-back guarantee. We're going to make sure that these guys are actually providing value for you, and that's what the Marketfy guarantee is. And if it's on Marketfy, you know that it's going to make you a better trader. And we just got past our 1-year anniversary. There's 55 products on the site now, and the funny thing was this is our first education week, and we have over 3,400 traders that have joined us. So it's just been a fantastic week, and I'm really happy. Today we're ending it with Forex, which we definitely don't have enough on the site, and Scott's got a great presentation coming up. But a quick disclaimer, and this is what we also do. There's no guarantees out there, folks. So, I'm going to show you some of Scott's, his traders tonight. I'm going to show you their results from the trading room. And it's fantastic over the last couple of years what they do. But nothing is guaranteed, okay? Past results are not indicative of future results. And if anybody guarantees you success or guarantees you you're going to make money, I promise you that they're the guys that we're trying to get rid of in the industry. So I'll always make sure that you guys understand that before you do any kind of trading. But having said that, and it looks like we got most of the traders in here tonight. I see that I asked the question, how many people made it out to all 4? I got a bunch of people: Mike, Patricia, another Mike, Hillary, Da, G-Man got in here, Fred. Appreciate you guys showing up to all 4. That's pretty fantastic. But without any further ado, let's get into the meat of the content tonight. Scott, how you doing, buddy?
I'm doing great. Good to be here. As always, good to talk with you guys.
Awesome, man. And real quick, does everybody got a good level here on Scott before we get started? Everyone got the volume nice and loud? All right, cool. All right, Scott, looks like we're good. I'm going to go ahead and pass the screen over to you real quick, dude, and I'm going to let you get started.
Okay, sounds good. Well, as you've already seen one disclaimer, so let me pop this over here. All right, so you see in mine, listen, nobody's telling you can make $3 million in 2 weeks in here. The possibility exists you could sustain a loss of some or all of your initial investment, therefore never invest any money you cannot afford to lose. Be aware of all the risks associated with foreign exchange trading and seek the advice of an independent financial advisor if you have any doubts. Now, there are many ways to trade the Forex, but let me just stop here. Why do people want to trade the Forex, okay? Well, it's the largest legal cash market in the world. Then I'll give you an example. Just the retail traders alone in the Forex are estimated to be $319 billion alone. That's not talking about hedge funds and banks and all that. That's just the retail guy. And over there, according to Wikipedia, and Wall Street does about 150 billion a day. So we're a little over double the amount of money that's being traded by retail traders, not by hedge funds and banks and that, just the retail guys. So there's a lot of interest in the Forex, and there should be, because first of all, it's only a few currencies you got to learn as opposed to 90,000 stocks and all that. But once you decide to trade the Forex, there are many ways to trade the Forex. One's called swing trading, one's scalping. That's what most traders do. Range trading, position trading, and target trading, and that is what we do. We are target traders, all right? Now, most traders fail, and you've all heard this before. They cut their winners short, and they let their losers run, okay? We've all heard that, all right? So let's just take a minute to understand what we need to know to target trade in the Forex, all right? There's a little acrostic we came up for. Here's what we want to do every day. We want to trade for pips daily, and in the Forex, we count pips, not points, all right? And each one of those letters stands for something we have to know about a currency. The first one is the trend. The T stands for the trend. We got to know the trend, and then we need to know where the Fibonacci ratios are. All right, the big boys Fibonacci ratios. All right. Then we need to know where the previous support or resistance is in the market, because the market knows where they are. History tells the future in the Forex. And then finally is divergence in the market, because if it is, the end of the run is probably near. All right. So it's a pretty simple thing. Just 4 things we got to know. The prevailing trend, and then the trend of the day, because you see the trend of the day may be opposite of the prevailing trend, all right? So when the trend of the day matches the prevailing trend, that's when wide open spaces open up, and that's when the big boys, the big banks, Deutsche Bank, Citibank, those kind of guys, are willing to make trades and actually move the market through those spots. We need to know where the PSRs, or the previous support or resistance, are. We need to know the fibs, not just the big picture fibs on the 240-minute chart, but we also need to know them in the small time frames, the 60, maybe the 10, maybe the 15, all right? And if divergence is in the market, then we would still trade in that direction, but we would be moving our stops considerably faster, all right? Are there any patterns that are influencing the traders? Bear flags, bull flags, wedges, rising wedges, head and shoulders, inverse head and shoulders. Those things all influence the traders. What are the most important targets, though? And they are PSRs, previous support or resistance. So let's understand them, all right? So in the Forex, you live on the second floor. No matter where you are in a chart, you live on the second floor. Now, if I live on the second floor, and I would like to find my ceiling because I'm going up in an uptrend, well, I don't know where my ceiling is, but if I can find the guy who lives above me, if I can find his floor, then I will have found my ceiling. And conversely, if I'm in a downtrend and I'm going to the downside, I don't know where my floor is. But if I can find the girl who lives below me, if I can find her ceiling, then I will have found my floor. Okay, it's a really easy illustration to kind of get it wrapped in your head. All right. So what I've done is I've taken a couple of charts and I'm showing you the supports here. So these are supports on a chart all the way up. All right. And as these go into the future, this is what support looks like. 2 candles to the left, 2 candles to the right of a single candle. Now, if we have a set of twins or sisters or railroad tracks or whatever you want to call them like this, then the 2 candles act as one, okay? So, now the opposite of that is resistance, just exactly the opposite. 2 candles to the left, 2 candles to the right that are lower in height than the highest one up here. And we didn't come up with this. This is done by Tom DeMark. He's a very famous trader. He has defined support and resistance for us, all right? All right, so now I've gone into the future, and you can see how the market knows exactly where these lines are. All right. So here's what happens. Let's trade the wide open spaces. That's what we want to do. All right. The market goes up to the first PSR, and it has enough power to drive through it, so it goes all the way up here. Now what happens here is they run out of sellers. All right. And you have some profit taking coming, and so we get a pullback, okay? But now what's happened is this target has already been taken out, this target has already been taken out, so these are the next 2 targets. So when the market gets an opportunity to bounce and go, they pretty much make that trade. You see that? Straight up through there, all right? Now they get another pullback where they run out of sellers. Same thing here. These are no longer the targets. The next target is here, and the next set is up here. And as you can see, they made both of those. And then they pulled back again. And then they went again, now to the next ones, up to the top, all right? So what is important here? In an uptrend, we only care about past support. They will be our new resistances in the same price area. And here's what happens to people. This is why they get messed up. Because when you say, I'm looking for support, then when you tell your brain, okay, I'm looking for my support, so go find resistance, your brain says, that doesn't make sense to me. I'm going to find resistance so I can find support. See, it rejects that, all right? Now, I learned Spanish when I was 40 years old. I've been speaking Spanish since then, but before that, I called garbage, garbage. And then when I learned Spanish, they told me, no, the word is basura. And I went, no, it's garbage. And they said, no, it's basura. And it took a while for my brain to understand, oh, if I'm in Spanish, it's basura, but if I'm in English, it is garbage, all right? So in a downtrend, we only care about past resistance because they will be our new supports as long as we're in that same price area, all right? So this is what we call trading the wide open spaces. And I'm going to go through a PowerPoint, but then we're going to go live in the charts and show you exactly how it works. So you don't think I'm just picking out, cherry picking some charts so you can see it, all right? So the key to successful trading is target trading is to know the trend. If we don't know the trend and we get it wrong, we're going to look for the targets in the wrong area. We got to know where the fibs are. Those are big boys' targets. We have to know the previous support and resistance levels. All right, that's where we're on the floor. We're looking for our floor and ceiling. And the above targets are only found on a 240-minute chart or a 4-hour chart. All right. So if you're looking for them down on the lower charts, they're not there. Why? Big boys trade the 240 in the day chart, and they enter on the 60-minute. All right. What do retail traders do? They trade the 10-minute chart or the 5-minute chart, and they never see them. A big boy has never seen a chart that small, and he can't even imagine how a retail trader could ever trade that. The smallest chart he looks at is an hourly. Don't believe me? Read a commentary. What did the commentary say? The hourlies are overbought. The hourlies are oversold. Why? Because the big boys trade the hourly or the 60-minute chart. All right. So we have to use strict margin management, and you trade your setup when the opportunity arises in those wide open spaces, and then you simply go for the targets. The targets are from the 240-minute time frame, so time is a factor. Okay, the 240 is 4 hours, all right? So you can't expect your trade to exceed its average true range just because you found a trade setup and found the target. If the target is 200 pips away and the average true range of the currency is 110 pips, then it's going to probably take 2 days to get there. So that's the deal. Now, if you knew the targets, you can make great risk and reward trades. And guess what? Unless you know the target and the stop loss, you cannot assess true risk and reward. You can't assess risk and reward unless you know what the reward is and compare it to how much risk you got. That's your stop loss. If you knew the targets, you would always trade with at least a 1-to-1, 1-to-2, or a 1-to-3 risk to reward ratio. You would never mess around with that little jump. If you knew the targets, you would not trade right into a target and get slammed and then blame your broker. Here's what traders do all the time in the retail market. They make a trade because they think it's a good trade. It goes up 6 pips, slams into something they don't have on their charts. They don't even know what it is, and all of a sudden the market reacts and goes the other way, and they go, daggone broker, he stopped me out again. The broker didn't stop you out. He doesn't care about your 2-lot mini. All right? What happened is you traded right into a big boy's target, and they're done. They've hit their target. So if you knew the targets, you would trade only in wide open spaces. You would conserve your margin for the most opportune area to trade. Now, traders spend way, way more time and emphasis on trying to find a trade than they do in managing and exiting the trade, because they major in the entry and they minor in the exit. They bail and never take advantage of the opportunity. The currency goes up, you're in the trade, it goes up 12 pips, and all of a sudden you go, wait a minute, it's coming back, it's coming back, it's coming back, no, okay, I'm going to click it out. Oh, man, it didn't beat me today. I got 5 pips, baby. Woo-hoo-hoo. What happened? You just lost the war. Yes, you made a winning trade, but you just lost the war, because traders who trade for 5 to 8 pips must be right 90% of the time for the rest of their life. That means that you have to be right out of 100 trades. You got to get it right 90 out of 100 times. Is that really realistic? No, it's not. So let's take a look and see what trends are. Trends in the Forex are less than 45 degrees. So how do we remember what they are? Look at your watch. A downtrend is 10 to 4 on your watch, and uptrend is 8-2 on your watch. Okay. Now, what happens in the market is this uptrend right here is a sustainable trend, but the movements inside it are not. They're greater than 45 degrees, so they pull it back down. They're greater than 45 degrees, they pull it back down. They're greater than 45 degrees, they pull it back down. They're greater than 45 degrees, and they really pull it back down. All right? But this trend right here is sustainable. The moves inside it are unsustainable moves. All right? So here we got a chart. There was a move to the downside. Here's a move to the upside. You can see this is 8-2. All right? So you must get the trend right in order to first find the targets. If you don't get the trend right, you will not be looking up here for targets. All right? So I want you to notice these thrusts here. All right? Here's a thrust. Here's a thrust. Unsustainable. See, they're unsustainable moves. This trend is sustainable, but these moves are not sustainable. All right? Now let's take the same move and let's put the targets on them. All right? Now we have a little tool. I just put it on here that finds targets for us. And can we all see that the wide open space is where the movements occurred? Break the resistance, boom. You see that? That's what the market does. And the average trader, rather than knowing that when I break this resistance, I got 200 pips up to here, what does the average trader do? Click out for 5 to 8 pips because he won't let his winner run. Why won't he let his winner run? He doesn't know where it's going. That's why, right? So these thrusts are momentum moves by the big boys to get to the targets. And by the way, the only people who print candles are big boys. All right? So there are 10 big banks, and then there's 500 to 800 banks who are basically the follow-through. The big bank starts it, and the 500 to 800 banks jump in, and they take it to the target. All right? There's another one up here to the day chart top up there. So the question then becomes, can we know the targets? All right? So I'm going to take that same little run right here, and we're going to go back on this trend and see where it started and see how to find the targets. So I've come back here. There's the old trend. We have a breakout here. As soon as we know that it is no longer a false breakout, we would find the targets. All right? It's the start of a new trend. So the first thing we're going to put on is the Fibonacci values from the swing high to the swing low. And you can see already, the market's already told you, we know exactly where that thing is. We know exactly where that is. Why do they know where that is? Because bankers, big boys, are all technical traders, okay? They trade in the intraday market using technical analysis, all right? So now, those are the interim fib targets, all right? Now, the wide open spaces, remember, are the unsustainable areas between those, all right? Now, we have a proprietary target tool that I'm going to use here, but it's just all it does is goes and gets historical support and resistance and Fibonacci ratios. They're built into the tool, but they're actually just getting classical technical analysis. Very similar to what happens on you when you use a fib retracement key, all right? Now, on a fib retracement key, there's a 500 Fibonacci retracement. Well, guess what? There is no such thing as a 0.500 Fibonacci retracement. But since the market goes to it so much, they added it to the Fibonacci tool so that you can use a tool to find it. It's the same thing we're doing, only a different methodology. All right? So I put the tools on here, and you can see it says R3, R4, and R5. Those are the resistance to the upside. Now, because it has the support and resistance in it, I'm using this just to keep this chart clean. But as soon as we get done with the PowerPoint, I'm going to go live in the market and prove to you that what I'm telling you actually does happen. All right? So here we go. All right? We can see here, these are the wide open spaces. Look what they did. They ran from the R3 right to the R4. All right? Then they ran out of buyers. So they pulled it back down. Now they're back down here. What do? They do it again. All right? Now they break up, but they don't take this target out here. See, they don't take it down, so they pull all the way back down here. Now that means that this target is still live right here. This target is live, and this target is live. All right? So what do? As soon as they get an opportunity to bounce off the bottom of the trend line, all right, the unsustainable thrust occurs there, and they go right to the target. They try to break it one more time. Not able to do that. Now we know that this is the top. And now we see that they're going to turn to the downside. All right? All right, here's a down move. All right, same thing. We're going to go back in the past. As soon as we know this is not a false breakout, we'll start a new trend. We'll look for our targets down below, in this case. So what do? We click on the swing low and the swing high of this whole move. Because what are they going to do? This is the move they just did. We're now going this way. We are retracing that move. So that's why we use a Fibonacci retracement key, all right? So, all right, these are the interim fib targets, all right? And in an actual trading environment, we would actually put the actual previous support and resistance on it, okay? So you can see compared to where we are now, the S4 is down here, and then the S5 is here. And this is why you're going to see you have to use all the tools, all right? So what does the market do? First chance it gets goes right to the S4. They pull back because they run out of sellers. They pull back, go again. Then they break into this new wide, here's a new wide open space here, pull back to find enough sellers to get it going, and bang, down we go, right to the 786 fib. They pull back again because they ran out of sellers. They got to go up and find enough sellers to punch through here. They try it again. Now we know it's the 786 fib, which will be the bottom. They didn't get to this target. That's why you got to know where the fibs are, right? And of course, the charts told you where the bottom was, and then we see the move back up to the upside. See? All right. So I'm going to do a couple more here, and then we're going to go live. All right. So I've taken a chart here, and I've marked the supports, all these supports right here. All right. Now I put this arrow on here because I want you to see this move here, because I don't want you to think that I just went and grabbed another chart and put lines on. I want to, when I click into the future, I want you to be able to see this part right here. I'm going to click in the future, see that part right there. Okay. Now in a downtrend, we don't care anything about these supports, because remember, the support in the past is resistance in the future. So when we get down in the bottom, when we start going up, now we're looking for our ceiling. That's resistance, so we got to go back and find the support. Notice that they took them right out. Notice this whole move. Look at the wide open space that they went in there. You know, right there is 200 pips, folks. That's 200 pips. At $10 a pip, that's a pretty nice little trade. They hit the target exactly. All right, they're done. They pull back. Got some profit taking. We're back down to here. Where are we going? Up to there. Then we have another shot at it. We can't get there. So this time they pull back even further, and now they shoot it right up to the top. There they go. Every time they're going right to these lines. All right, now I'm showing you a FedEx logo. And my question here is, can you find the arrow? Look at the FedEx logo, and it's between the E and the X. Now, if you have never seen that arrow inside the Federal Express logo, you will never see a Federal Express logo again without seeing the arrow. Once it's shown to you, then you never miss it, all right? And that's kind of what a trade setup is. A trade setup is whatever your trade setup is. We have ours. Everybody has theirs. Whatever that is, it's kind of like the arrow inside the E and the X. It's a place that we can determine the money might come in, and we've got a wide open space for us to go to. All right. So I'm going to show you the 10-minute world here. All right. This is you can see our little signals, the little red arrows and painted candles right there. Okay. There's a wide open space. You had 5 opportunities to trade in that wide open space. Then we break into the next wide open space, and down to the previous support or resistance we go. All right. Then we do it one more time. Can you see that? That's our market. That's our trade setup. So here's the question: would you have confidence to stay into the targets if you knew where the target was? If you knew where it was going, with a high degree of probability, you would have the confidence to stay in till you got there. All right. And would you also know not to trade these signals? These 2 signals come right at the target. So we know to pass on those signals, even though momentum is trying to push through there, we won't make the trade, because if they can't break through that, they're going to have to go back up to find sellers. So we won't make these 2 trades. But as you can see here, there's 1, 2, 3, 4, 5, 6, 7, 8 opportunities to the downside, of which only 2 of them were not tradable. So let's do it live in a chart. I'm going to pull up a chart here, and I'm just going to go back in time. And this is, by the way, how you practice it. You go up to a 240-minute chart. So I'll show you how to practice it. Let's go back here. Let's find this one right here. Let's find this downtrend right here. This move down here. So what you do is you define it, because you've already got it printed. So now you can go back and see, could I find where the targets were on this way down? So I'm going to click the top and the bottom so I know where to look in the past. Now I'm just going to scroll it forward, and what am I doing here? I'm pretending that this is about to happen, and I need to find out where the market's going, all right? So I need to find my floor, which means I go back in the past and find my ceilings in a downtrend in the same area, right down here. So I'm going to highlight these first, and then we're going to draw them. Here's a candle that sticks up to the left, to the right, creates a lower low. That's a good one right there. Here's another one right here. It's set of twins, creates a lower low. That's a good one right there. There's another one right here, creates that lower low. This one creates that lower low. This one creates that lower low. And that one doesn't count because there's two candles. Oh, yes, it does. There's two candles below, so that one counts right there. And so does this one because it created a lower low right here. So those are the ones I'm going to draw on here. All right. I'm just going to draw a horizontal line real quickly. Right there. 1, 2, 3. Got that one there at the same time. 4 and 5, and this one right here. All right. Now I still got space down here. I got a big wide open space, so now I'm going to have to go back in the past even further and find a downtrend here to make sure I didn't miss any. And I got a big one up here also, as you can see. So I had one right here, right there. All right, I got 2 of them on there. Hold on. And I have another one right here. Creates that lower low. I got one right there. Creates that lower low. And then one down in here, I got this one right here, creates a lower low. That one creates a lower low, and this one right here, and this one right here, and this one right here. All right. So you say, wow, that's a lot of lines. Yeah. Well, we'll see what does this mean. Okay. So we're going to go back here in the past now. All right. So we're going to watch and see how the market moves to those lines. I'm going to spread it out real big and see. I already know a couple of things right here already. I know that this is an area I will trade in. All right. The space between here is 89 to 49, so there's 40 pips here. I can trade that. This is bigger, so I can trade that. I don't want to miss this big area. These are all areas that I can trade in right here if I can get a signal. Right? So we're going to stay right here. In fact, I'm just going to drop down to the 60-minute chart a little lower so it'll make it easier for us to see. Let me make sure I get back to that area. Hold on. All right, here we are. We're right here. We're expecting the breakout. Where did they go? Bam, right to the line. You see that? All right, now, this target is now taken out. All right, it is still a barrier, but it's been taken out. So now, when I get a pullback, this is my next target. All right, they ran out of sellers, so they go up to find some sellers. Go up, do a Fibonacci retracement, and when we break to the downside, we're going to look for the move all the way to, oh, man, they just rocked that one and without even thinking about it. Took all these out here. So now, they're both out one time. That's the kind of movements we get in the Forex, by the way, folks. So lots of money is able to be made if you can stay on the right side of the order flow. If you're on the wrong side of the order flow, it's just the opposite. All right. Now, this is where I can trade. So I can trade in this area. I'm going to have trouble with the 5450. People don't know, but 5450 is an even number, and there are option contracts sitting on those numbers, and therefore they have a tendency to slow the market down. All right, they get a little pullback here. This is my target right here, 53.87. I get a nice pullback. I'm looking for an opportunity to sell to that. Boom, right to it. Bam, they went right to the line. Daggone it, that guy is lucky. He is so stinking lucky. It's amazing. All right, keep going, get another pullback, and if we go, we're going to the next target. All right, that's it. All right, let's see if they go. Pull back, got to go get a run at it. All right, now we got lots of profit here. See, our profit potential, this is no longer a target. There's our target now, see? Big wide open space. It happens to be 120 pips from where we are right now. All right, let's see what they do. Gee, Mani, he did it again. Went right to the doggone line. All right? How does he do that? Just follow the charts, folks. And this is how hard is this? This is not rocket science. All right? There's no rocket science in the Forex. Forget all that stuff. It's just simply finding support, resistance, and Fibonacci's and trends, and then waiting for that opportunity to come. And here's where most people are trading. In this junk up here. In this junk right here. They're trying to, oh, it's going up, man. I'm in, I'm going up. No, they're going up to find some more sellers to sell it to the next target. Oh, is that what they're doing? Gee, I took a loss on that. The broker took me out again. No. All right, next target is this one. If we get pulled back, bam, right to it again. I cannot believe how lucky this guy is. He just keeps hitting the lines like crazy. All right, if we break it down, oh, took them both out. Gee, Mani, how did he do this? I cannot believe it. All right. Kind of getting the idea here that this is probably what they do because that's what they do, right? All right. Now our next target, a pullback. Our next target is all the way down to here, folks. All right. Will they get it? Almost got it. They see they almost got to it and they didn't get it. So what do they got to do? They don't have enough sellers to get there. Where do you find sellers? Professional sellers will not sell at the bottom. Professional sellers sell at the top. Professional sellers will not sell at the bottom. Professional sellers sell at the top. Professional sellers won't sell at the bottom. Professional sellers sell at the top. You getting the idea? All right. Where does the dumb money trade? At the bottom, and they get stopped out again because they're trading at the wrong place. All right. So where are they going? Oh, it did it again. Daggone this guy. Okay. It keeps going, and now we get a big pullback. Oh my gosh. Look at this. Now this target's out. Right here. It's gone. This target is out. It's gone. This is our next target. And everybody see this opportunity from 52.50 to 50.79. 52.50 to 51.50 is 100 pips. Down to 51 is 150 pips, and there's another 21 pips to there. 171 pips here. 171 pips. All right. Trading a standard lot, which pays $10 per pip, times 170 pips, that's a $17,000 payoff, folks. All right. What do we got? Oh, man, look at that. They did it. Why did they do it? Because there's nothing to stop it. That's why they did it. The targets are gone. What did the average retail trader do in here? The average retail trader didn't know this line was here, and this line was here, and this line was here, and this line, and they were all taken out. So as soon as it started to falter, what did they do? Oh my gosh, click, click. Ah, man, I made 8 pips. Yes. And the professionals walk away with 170 pips. Boom. Down to the next one. Oh, man, he did it again. Yes, you can, any time of day, as long as you're in the first 2 to 2.5 hours of the session. And the reason for that is because the big boys only trade the first 2.5 hours of the session. They're the ones who print these candles. If you're trading after the first 2.5 hours, you're trading with the dumb money. Don't do it. Trade the first 2 hours of the session, maybe 2.5 hours, when you got a session overlap. When London is overlapping New York, when New York is overlapping Sydney, when Sydney's overlapping Asia, when Asia is overlapping London, that's where you trade, the overlapping markets. That's where the big boys are here, all right? All the way down, as you can see, to our lowest line. See how that works? All right. Now, would everybody agree with me that I just picked a spot out there. I'll do another one here, just to be sure. But would everybody agree with me that it looks like this is probably what they do? All right, so let's go find an uptrend here. Let's go over here to the euro yen. There's a nice uptrend here. Let's see if it works on a 240 and see if it's still there. There we go. Okay, so we got a nice uptrend right here. Let's practice on this one. This is how you practice, by the way. I'm showing you how to practice. There's no secret here. There's no rocket science. There's none of that. Oh man, we got the really cool stuff over here, but you know, only us. We're the only guys who know it. And if you know it, you'll be able to make money. That's all junk, folks, because the reality of the situation is if they're the only ones who know it, then they're the only ones who are trading it. All right? That's the way that works. All right? So we're going to do this one right here. Now, in this case, I'm looking for my ceiling. All right? So spread this up. So I'm looking for my ceiling. So what do I got to do? I got to find the guy who lives above me's floor. All right? So that's support. So we're going to start down here. There's one right here. There's one right here. There's one right here. There's one right here. Now, is this hard to see? A wick sticking down. That's really hard, man. That's hard. All right? The only thing that caveat is it has to continue the move to the upside, so you have to make a higher high. That's the only thing you got to do. How hard is this? This is not hard. 1, 2, 3, 4, 5, and 6, and 7, and 8. All right. Now, we're over here. We can already see very quickly this line's already taken out. This is an area I can trade. This is an area I can trade. I can't trade in this area here because it's not even 30 pips. But if they take the first target out and pull back, then I can trade to it. I can trade that area. I can trade that area. I cannot trade that area unless they pull back, and I can trade that. Now, that's opportunity. That's all opportunity right there. Right? That's where they are. So, all right, we can see, oh, man, he did it again. Oh, man, he did it again. Right to the doggone pip. Oh, maybe we'll get a pullback here. Get a pullback. Boy, they sure knew that line. Man, They sure knew that line. Yeah, they did. Okay, there's the pullback. All right, now, you know that all those ones that they've already gone through, they should all be dashed. I'm not going to bother. You know, all these are dashed. So now you can see now's my opportunity from here up to here. All right. So this is a little bit about 129.60 going up to 1/3. 30.60 is 120, 17, 177 pips right here now, folks. Remember, this is the area I wasn't going to trade in, but because they pulled it back, I can now trade in it. All right. So let's see what they do. Oh man, they went right up to it again. Gee, my knee. Pulled back. They're having trouble. Oh, did it again. Oh man. Big pullback now. This is gone too now. See? That one's gone. My next target is here, 131.22. Oh baby. This is when we all go filing our teeth. Come to pop 'em. Come to pop 'em, baby. Let's go. Oh, he did them both. Look at that. That guy is so stinking lucky. How lucky can you get? I'm telling you. Oh, he went right up to it again. Gee, my knee. You get the idea? This is what they do. Now, I want to pop our little tool on here and show you how the tool helps find these targets. And all it does is got historical support and resistance. All I got to do is find a bottom. Tell it I'm a buyer, and it tells me right where we're going. All right, now this is the wide open space. This is the big wide open space. Everybody seeing this big wide open space? This is a nice little wide open space. Everybody seeing it? There they are. All right. If two make the same higher high, you just take, as long as you got one, it doesn't matter. That's a good question, by the way. As long as you got one that makes a higher high, even if they're both doing it, you want it. Sometimes you'll have one really close by. Let me see if I can find one of those, and you would mark them both, because going into them is going to be harder to get through two of them than one. Let me see if I can find you one. That's a great question, by the way. A great question. Let's see if we can find one here.
Hey, Scott, who asked that question? Which one was that?
If there are two different supports make the same higher high, which one do you use to draw the line?
Right? Oh, okay. That was Da. Okay, cool. Thanks.
All right. So, you know, like right in here, you have this one that we had back there. You'd have this one right here. Excuse me. Nope, can't use that one. Sorry. Hold on a minute. I'm trying to. Here we go. Right here. So you got these two right here, right there. And we would market them both, and we would know we wouldn't be getting. See, we can't get through two lines like that. See, that's a barrier that's too tough for the guys to get through. So they pull back off of it. Right. Let's see what happens when we get in the future here, when they come near that line again. See, they hit it again, and they had to hit it twice. All right, and they finally popped it out, and immediately they were pulled back down. Look how many times that line was hit. That's hard to get through. See. Hard to get through, up to it again. See how many times? That's a tough line to get through, see? Because there's two PSRs, previous support in this case. See the previous support or previous resistance, okay? So, all right, now, I just want to do one more thing just to show you. I'm going to put the fibs on here, all right? So I'm going to take the fibs from the swing low to the swing high all the way up to the top here. All right? And now, let me make these a little bigger so you can see them, and I'll change the color just for this one right now. Make this 3 and make it yellow so it stands out. And make it. I just want them to show out there for you. All right, so you can see them. Notice the areas that we have, notice that that's what I said, our little tool will go find them. So you notice how this 214 fib extension, our tool found that also, right? Notice right in here, we got lots of stuff. Now see why they had such a hard time to go through here? We had a 50% fib, we had a PSR, and we had the R4 on the HSI. So that's why it was so hard to get through this mess right here. Do you see that? But all I did was click 3 things, folks. 3 things, and I knew that, right? Right. So I think that that's probably enough to prove it to you. So let's open it up to questions, and I'll see if I can help answer them.
Yes, Scott, this is great. We have just an incredible amount of feedback already coming in. Chris, RJ, Da, Lee, Tim, Abdul. We'll get to Bruce. We'll get to as many questions as we can. You keep referencing a tool that you're using. Can you explain a little bit more, Matt? And I think I got some questions coming in. This is your software that you created, correct?
That's correct. This is proprietary to us. and we found a way to create an algorithm that would blend historical support and resistance. And you saw I'm putting the previous support and resistance on. I am putting the actual on, but it has the ability to go back in the past and find them. And then it has an algorithm that puts the Fibonacci extensions. Every time this thing goes up, it pops the next extension from where that should be, and then it kind of rolls that into one kind of an even number type of thing. So, and it's proprietary to us, comes with our charts, okay? But, you know, I mean, it's phenomenal. It's just so doggone easy to use, you know? It's crazy.
Oh, that's awesome, Scott. And so as a student, your students get the charting software when they go and trade with you, correct?
That's correct.
Cool.
That's what we do. I just wanted to show you how accurate these things can be. Just real quick here. It's going to find. I'll do the down. I'm just taking a chart with nothing on it. Bam. You think they knew where? Look, see, it knows exactly where to go. Okay, let's pop it to the upside from here. Take this one off. See, and these are the wide open spaces that we want to trade in. These areas are where we want to trade. Now look at this. This is why I said earlier, if you're trading on a 240 chart, because that's where we're actually trading the 240 chart. We will enter on the 10, but we're actually trading the 240 chart. See that? So this, see how long this took? It took a long time. But hey, how long can you stay in a trade that keeps going your way? As long as it keeps going your way. You get stopped out here on a pullback and it starts all over, and where does it go? Right to the target, see? So if you knew the target, you would know to try to stay into it, right? Maybe you get it all, maybe you don't, but you get a whole lot more than 5 to 8 pips, right? So hopefully that helps you.
That does. So I have MX Tally asking, is this concept applicable to all markets? And I think that
yes, it is.
Same question from Lee is, you know, does this work in choppy consolidating markets?
It works extremely well in choppy consolidating. Let's go back to that currency where we were working on over here, which was the euro yen, all right? So this is what is called the pole, a rectangle, right? Everybody should know that. Whatever goes in and going out, it's going to go out, all right? So that's called the pole. So once you see this bottom right here, what do? You wait, you trade it from the bottom up to it. Trade it up to the bottom of it, and one of them is going to break out, right? Then it pulls back down again to the bottom one more time. Bam, this one goes out. Now, of course, this target has been taken out so many times, it was hard to get through, but what are they trying to do? We're trying to get through it. That's what they're trying to tell you. That's why they're going sideways and keep busting up against it. Find enough buyers to break it. Find enough buyers to break it. Finally, once they broke it once, all right, then he pulled back, and they ran out of buyers here. Why did they run out of buyers? They hit the 382 fib. So they ran out of buyers because people took their trades off there. Pulled back down. This time, now we can go because this target's out, and now the top is there. Can everybody see? That's exactly what happened. Once this target was out and this target was out, we went right like that. See? And that's why we're target traders. We will not trade unless we have a wide open space. Why would we want to trade if we didn't have a wide open space? And the other thing that's really good about this is that's a great question, because according to Stocks, Futures, and Options magazine, the markets are only trending 30% of the time, which means 70% of the time the market is going sideways. Wouldn't you like to know that you were in a big wide open space like this, and every time it came to the bottom, they're going to run it up to the top? Wouldn't you like to know that? Well, you could know that if you knew that was a wide open space. See? So that's what happens. So that's proof is right in the chart. It's right there in the chart. Good question.
What defines a target being taken out? Is it a touch of a wick or a close through? That was from Da.
That's a great question. It is a touchable wick, all right? Yeah, because these are what are called probes right here. All these little wicks you see on the top, these are called probes. And what the market makers are doing is pushing the market up there to see if there's any entry orders to fill. And they do find some. Every time they come up, they find some, and that's what creates this, but then they run out of the orders. So they know there's no buyers. So they come back down here, and then they go up here like this. They try to do it again, and it falls back down. There are no buyers. They pull it back down to see if you can see. If you understand that, then you'll quit trading in the junk and wait for them to finish that and trade it up again. See? And all those are probes to try to break this thing, and finally there are entry orders sitting in here. Okay, that's what people say. They're running stops. They're not looking for your stop loss, folks. They're looking for buy stops for the continuation of the move. That's what they're looking for. And everybody thinks, oh, they're running stops. That's a good thing if you're in the right direction. It's a bad thing if you're doing it the wrong way, but it's a great thing because they're trying to make it go in your direction. That's exactly it. Good question.
How do you know when the trend is over so that you can use the fib, Scott?
Good question. You guys are pretty smart. All right. Let me pull back here. Oh, we had a breakout this morning, so I'll show. Let me see if I can remember which one it was on. The Euro, Aussie, nope. The there's the Aussie yen. All right. So here's a trend right here. All right, we're looking to be a buyer. Notice the wide open space. That's why we made that money. That's why we made that trade right here. Comes down here. We're looking for the bounce. It doesn't bounce. It breaks and it hooks. A break and a hook is what tells you that we're going to go. But that doesn't mean anything. Just because you broke out of a trend line means nothing. You've got to take the support out. Once you take the support out, look where they went. Right to the target. See? Right smack dab to the target. Right there. So you don't trade a trade breakout. All right, you trade a trend breakout. You trade a trending breakout when it takes out support, or going up the other way takes out resistance. All right, that's when you trade it. So, good question. So right over here was where they took out resistance here. Okay, we got a breakout right down here, breakout. All right, here's a false breakout. Why is it a false breakout? Because there's the last resistance. We got to take that out. They didn't take it out, so they came back in here. Okay, we come over here. Here we got a breakout here. There's the last support. And once we get above it, hook and a go. And there's the first opportunity. There's the second opportunity. As you can see, this is what we do. These are my charts that we do in our live room. You know, and our traders, we teach how to do this live in a class every single day in a live room with these charts. And traders, then what happens is we identify these trades because we can't make a move in our market. We're going to be in the New York session. We look at an opportunity and say, this is a possible opportunity for later on today. And everybody knows where it is. And then the next day, if the opportunity happens, we ask, okay, how many of you took that trade? And they start popping in how many pips they made on that trade. So that's it.
Yeah, and Scott, kind of segueing into that, we have a ton more questions. Steve, John, Jack, Lee, Patricia, we're going to get to those folks. But going into that, we got a lot of people asking about Scott's actual class. So Scott, I'm going to take the screen back real quick.
Okay.
As most of you already know, what I'm about to show you, what my job is to show the proof, guys. And that's what we've talked about Marketfy. This is day 4 of our education series. It's our job to find the stuff that's actually working. Now, I told you I met Scott and Jerry in Dallas a couple of years ago. These guys, they sold our, Scott, you can correct me if I'm wrong. Jerry, we talked about a software company he sold, and this is how they created this, right? And they found, into the markets and they broke into the markets. So what I'm showing you right here is not their performance. This is the averages. Is it the averages, Scott, of the room?
Yeah, we take the high and the low out, and then we average what the middle is. And anytime we can go conservative, and we never take the highest number. We have a lot of people who might get 80 or 90 pips, and then there's a bunch of 53. We'll take the 53. We don't want the 80 or 90. We don't need any pips, folks. We got 27,000 pips so far this year. Our traders have
27,000 pips this year alone from you. And this is not you, Scott or Jerry. This is your students, right?
Yeah, that's our students.
That's incredible. That's just the results 2000 or summer 2013. The whole year though, 2013, 27,000 pips. That's fantastic. And one of the unique things about being a Forex student with Scott is you not only get a live trading room and all these great things with their courses and the webinars. You can see how fantastic of a guy Scott is, but you also get their software that they built, that they're using, and that they're making money off, which I think is something that is very, very cool and unique. Results winter 2013. So this was January through May. You can see each month. So this wasn't just like 1 month they made 8,000 pips and the rest they either lost or only made a little bit. I mean, this is consistent performance month over month. Going back into 2012, you can see same thing. They got total losses 76, total trades 595. And look at each month. These are the pips each month from July to December. Total year to date, they did 19,000 pips last year. 19,000 pips. Is that right, Scott? 19,000 pips in 2012.
Yeah, and people always ask me, say, well, why are you doing so much better this year? I say, because our traders are better. They're now they're a year longer with us. So
that's very true. You got first half of 2012. Folks, this is amazing, amazing stuff. Forex is a little more complicated. We all know that. Forex is a little tougher. We all know that. That's why there's less Forex traders, right? But you can see that there are programs out there that can help if this is the type of trading you're looking for. So now this is great. I was talking to Scott about the packages I could put together because I said, look, if you're coming on Marketfy Education Week, whatever you're giving, offering, we want at a substantial discount for our traders, for the people that we bring in, the people that we're trying to help, especially because this is our first education week. So what we have for you is they have an intro to FX target trading. Because I know a lot of people that are looking to get in Forex are a little more beginner. That comes with their Forex trading ebook. They have a pattern recognition trainer. So we went through these patterns just a second ago, right? We're looking at all the trends. They have a course that helps you identify what he's talking about, identify what the trends and the patterns are doing. And then you also get in this, and this is actually, I want to make sure this is clear. You get the, right here. Yeah, there we go. You get 1 month of the software as well, okay? So you actually get a subscription for 1 month to his software. That's typically $330. Now, unlike a lot of other things, when you actually have a subscription to Scott's charting software, so the software he was just using that we'll go back over, he's actually paying for data for that from the exchanges. So he's actually got a cost for that he and then he obviously offers you. So you're actually paying for real-time data as well. Since it's Education Week deal, it's only $149. So you're going to get a month of the subscription for the charting software that you saw, and you're also going to get the course for the pattern recognition for $100. You're going to get their ebook, and you're going to get the intro course, okay? So $149, and that's a student package because obviously we're learning. It's the student package. Now, if you want the PIPS package, right? If you want the PIPS package, if you want the results that we were just talking about, you're going to get everything that we just said, okay? But then you're also going to get 3 months of the chart subscription, and you're going to get 3 months of the live trading room. All right, 3 months of the live trading room where you're with Scott, you're with Jerry. Scott, when is the live trading room? When's it open?
We open at 9:30 Eastern time for the first 2.5 hours of the New York session.
So you guys are trading the overlap of the euro and the U.S.
That's correct.
So that's what, and he just said why he did that. That's where the big boys are in, right, Scott?
That's right, and then we identify the trades for the later trades in the Sydney, the Asian, and the London trade session, because we have traders from all over the world, and so the people come in for a month or so in the New York session, they get a hold of it, and then they start trading the London by themselves. They're welcome to come back, obviously, but they learn how to do it, and so now they're trading the overlap then in 3 o'clock in the morning. But we've already identified where the possible trades are. At the end of the New York session, we do a 15-minute video that everybody gets the ability to look at, and we outline where those exact trades are, why we think you should look at it, and all that. They're not trade signals now. They're just saying, if I was going to be trading tonight in the London, I would be looking for this baby right here.
Looking for those gaps, right?
Yeah.
So that's typically $2,430. That is nothing compared to what you get. I mean, that is nothing. $2,430 is nothing compared to what his students are making in that room. I mean, we just showed you what they were making. That's nothing. The education price is only $799 today. The coupon code is PIPS. If you guys I got people asking where's the links, Kyle. The links are going into the chat right now. Nathan's putting the links in the chat right now for me. If you're sitting there and you've always wanted to trade Forex, and Patricia, she's one of the smartest traders we have on Marketfy. She's the type of person that might want to get into the currencies now, right? Because you've been trading maybe stocks and options for a while, and if you want to identify these trends, right, the PIPS package is for you. If you've been looking to make money in Forex, or you're struggling, which is most people struggling to make money Forex trading, you want this PIPS package, okay? The $799 is going to get you an amazing, amazing deal. 3 months to the live trading room, 3 months with their charting software. That's alone, those cost $900 a month right there, okay? And the last package, and we always offer this to everybody, is obviously more the hands-on package. Now, this one's fantastic. You are getting an entire year to everything, okay? But, Scott, can you go a little more? Now, I want you to tell everybody about the fast track package, Scott. The intensive 3-day workshops, the monthly workshops, and more importantly, what are your daily market analysis sessions?
Well, we start with fast trackers. we call them fast trackers because what they really want to do is they want to accelerate the learning curve. They want to collapse the time frame it takes to learn to trade the market. Okay, so you want to fast track. So what do? We do a 3-day workshop where we do a download to your brain. Basically, we record everything. There are notes. There every video, every tutorial is done, and they're live up there, and you can go back as often as you want. And by the way, every time we do one, all of our fast trackers can go repeat it as often as they want. They never pay again for that workshop. Then every Monday night we have 2 classes. Every Monday night there are live classes where we're not trying to trade here. Now we can just take one little thing and say, let's really understand this, right? And then every morning prior to the New York session, that we're looking in the market for specific trades. Fast track traders have 4 trades that we don't release to anybody. They're very, very high probability trades, and we're looking for those opportunities and where they might happen in the very next session. And sometimes that's what we do, but sometimes we have a piece of real estate. Real estate is a piece of the chart that gives us an opportunity to say, whoa, let's stop down here. Remember we were talking about this, and when the market gets in this kind of situation, we're looking for this to happen. All right, I can actually I'll show you one when we get up a little later here, but and then we really flesh that out. So it's a total learning experience, hands-on, with intense for a half an hour. Then we go into New York and we actually trade that. Well, that's a fantastic opportunity right there. Once a month, I trade the Asian market with those fast trackers, and we do lots of other stuff. You know, if something comes up, we might do a whole night workshop on psychology or something like that. You know, so it's pretty fantastic.
And I know you've had, I talked to somebody, I know you've had some traders in there, and I mean, they've been with you for a long time. Once you go through that process, I mean, they're trading with you for a long time, right, Scott?
Yeah, most of our traders actually a lot of our traders started with us in 2003, 2004.
Wow.
And they're still with us today. And you know, we have 4 or 5 hedge fund guys in the room every single day. Why? Because we make pips. That's why. So they're watching what we do. They're trading a different methodology, but they're watching how what we do fits with what they're looking at. So they're in the room every day also, and we have a real family atmosphere. It's a chat like this, but the chat is open, and you know, we're answering questions. That's what we're there. We don't call it a trading room. We call it a training room. We will take any trades we could find while we're in there. But our purpose is not to actually trade, although we want to trade. Our purpose there is to train people because we want you to do it yourself. It doesn't help you one bit if I have to hold your hand. That's why we don't care what my record is. What we care is your record, because that means you're doing it. See?
Awesome. No, and Scott, I'm telling you what, that's in FX. It's very, very important to have people there that are trading it successfully, because Forex is notorious for chewing up and spitting out retail traders.
Yeah.
Fast track package, it's typically 17 grand, $230 for this education week. This is incredible. It's $2,999, guys. $2,999, and you saw. We're going to go back to it. How many pips that can equate to it? Because you get an entire year, and your year to date. Last year they did 19,000 pips. This year, and this is not Scott and Jerry. This is what their students are doing this year to date. What was it? 27,000 pips, Scott?
Yeah, over 27,000 pips.
That's incredible. All right, we're gonna get back to this because I know everyone keeps asking questions about the packages. John, yeah, you're gonna pay $7.99 one time, but it's gonna get you 3 months of the charts and 3 months of the live trading room. Okay, G-Man, you actually do get the pattern recognition software with the Pips package. I'm not sure why that's still blurred out. I'll make sure to yell at my marketing guy when I get done with them. All right, Scott, let's get back to the charts. I'm gonna throw you the screen back real quick.
Okay.
And we're going to go through a couple more of these questions. If you got, I know we're running a little bit over, but I'm sure we got a little bit of time, right?
Yeah.
Perfect.
All right. I want to show you the pattern recognition trainer. Here's what has, in order for you to understand patterns, the brain works a specific way. You have to do 300 patterns all at one time, and then you have to take 24 hours off. Your brain needs 300 images to store in a database, all right? That's what it needs in order to recognize something. But then it takes 24 hours to build a retrieval system, which is what your brain does when you're sleeping. So I've got this up here. So let's say, now the worst thing is if you go do 300 patterns wrong. Now you've got a corrupted database in your brain. So this is a little trainer we decided. You just pop it up, and your cursor now becomes a drawing thing. You say identify the bear flag. So I know there's more than one. So I draw the flags on here like this. See, I see them right there, right? And you see, this is why I want to know, because that's what they do. That's what they do, right? So then I click identify, and it says, voila, you got it right. Now when you go do your 300 patterns, you won't do them wrong. You can always go back and click this and say, wait a minute, I'm messing up again. Click it back. Oh, yeah, okay, that's what they are. And once you got 300 down, of course, you need thousands of them, but you got to get the first 300, right? And there are a lot of, look at all these patterns you got to learn. Oh, my gosh, there's tons of them, see? So, you know, that's a cool little thing here. I wanted to show you one of the patterns that we traded this morning. So, and it's over here on the British pound, right here. I've taken it off. This is called a rising wedge, right? A rising wedge pattern, right? You see how the market gets squeezed here? That pattern always breaks to the downside here, right? And so there was the trade. Look at the opportunity from there to there. That's the wide open space with a pattern saying we're going to go to the downside when we break. And sure enough, as soon as it broke, bam, down it goes. Well, we knew that ahead of time. We were waiting for this back in here. We've actually waited a day and a half for that trade. Right? And that's one thing traders need to understand, that most traders go in and they're trying to make 10, 12, 15 trades a day. There are only 1 or 2 real opportunities per session, folks. 1 or 2. Would you rather put your money at risk once or twice, but make 180 pips instead of making 15 trades for 5 to 8? And that's why the Forex chews people up, because the average retail trader only trades for 5 to 8 pips. And because of that, they got to be 90% correct. No wonder they get blown out. So, all right. So, any more questions?
Yes, got a couple more. Do most of your trades have a 1-to-1 risk reward ratio? That's a dual.
Yeah, and that's the lowest that we would ever take. In fact, we rarely even take a 1-to-1. We're looking for what we call snowman. Let me find you one here. Hold on just a minute.
And while you're looking for that, Scott, I'm going to go ahead. On what programs does this package work on? E.g., Android. Martin, can you clarify that a little bit more? Are you talking about the actual? Are you talking about your mobile devices there? And then can we upgrade later from pips to fast if needed? D, so we can't let you do that. I had to beg Scott to get these prices. This is just for the Marketfy Education Week. So being a part of the Marketfy, that's why we got those prices. They will actually close tomorrow at 6 p.m. like the rest of them did. You get about 24 hours, little over 24 hours to get into the deal. But we can't upgrade you once that's over. Now, if you buy it tonight, you want to upgrade tomorrow morning or afternoon, we can do that. But I can't do it past 6 o'clock tomorrow. What else we got? Yeah,
G-Man. Show you a snowman. This is a snowman right here. This is what we're looking for. Always we're looking for this. We call it a snowman. You can see him right there. Okay, it's 2 areas, 2 wide open areas, one on top of the other, right here. So our first trade goes in here, and we double our position in here. All right. So you can see what happens when we find one of those. The big boys make these trades. That's because that's what they're looking for, is these wide open spaces, and this one just kind of climbs up the hill all the way up. See that? Bam. 2 wide open spaces on top of each other. So this is what we're looking for. So sometimes when we're down here, and we may have a really small area down here, but what the bigger trade is above here. So what we do is we take a small area. For instance, this one would be right here. We got a little fib right here that we'd have to deal with. Okay, there's a small area right here from the break, and then there's the big area here and the really big area here. So this would be a 1-to-1 trade, but the overall trade is 1 to 2 and 1 to 3. All right, see that? So in this little area here, we would only trade 1/3 of our lots. But as soon as we break here, we double our position here, and as soon as we break here, we put 3 out of 3 on top of here. And so when you walk out of here, when you get that kind of trade, that's how we get so many pips, folks. Is our traders aren't trading for 5 or 8 pips. They're walking in every morning and saying, "Wow, I got 295 pips last night on the Euro CAD." You see, that's why, because they're doing this kind of stuff. All right, that's what they're doing. So,
Patricia, I like the snowman. Nah, me too, Patricia. Scott, Jacob came in and said, "This is the big boy finder. Your software, the big boy finder." That's exactly what it is.
That's a good one.
Martin asked, so Scott, is this your software? Can you only use that on the PC, correct?
Yes, you can only use it on PCs. Most software is written for PCs because Mac has only 5% of the market, 5 to 8. It's growing, but You can use it on Macs with Boot Camp or with VMware or something like that that creates a Windows environment on your Mac. Then you can use it there. In fact, I do. My laptop is a Mac running in Boot Camp, and I run my charts on it all the time. So,
Scott, this is a great question, and is actually one that I was thinking in my head. How, and on average, what you've seen in the past, and talk about some of your customers. Da asked, how long have you do you have to practice this before you can confidently trade consistently and profit? Like, what do you see usually in your room?
it's a great question, and it's a tough one to answer because the real question isn't that. The real question is how bad do you want it? Because if you really want to do it, you got to spend hours upon hours practicing putting your lines on because the lines are what define where the wide open spaces are. So the guys who spend 2, 3, 4 hours a day, every day they trade in the live market, and then they spend 2, 3 hours at night just practicing, they get it pretty fast. Right? The guys who just think I'm just gonna, I'm gonna blow this up. This software ought to make me trade no matter what. They're gonna struggle because there's nothing worthwhile, folks, that doesn't take effort, and you've got to put the effort in. Okay, I've got traders who get it in 3 weeks. That's fantastic. But then we have traders who've been trading. I'll show you one of them here. I'll pull up his account for you. Hold on a second. Give me 1 second, and I'll pull this up. Here we go.
And Lee, that kind of answers
your. This trader have been trading.
Oh, go ahead, Scott.
This is a trader who had been trading for about 3 to 5 years, and he came to us. He was marginally successful, and in 3 weeks, this is what he started putting together. He had 7,000 pips going. That's his trading account.
That's incredible.
You notice there's no losses. And look at the side. Look at the pips over here: 536, 547, 428, 419, 347, 329. See, once you learn to stay into the targets, then you can build positions like this, which really makes you money. Look at some of these trades are 20 days long, but as long as the trend still stays in effect, we need to maximize the trend because it only happens 30% of the time. So when we get a trend and wide open spaces, we need to maximize that time. That's it.
Now, Scott, that brings us into the next question. On what you're just showing, somebody asked, "How do you manage your trades when you're sleeping?"
You can't. We don't recommend that you use a trailing stop, but in the beginning you will because you don't want to invest in software. But there is software out there that will run trades for you. One of the things you have to do is learn to trade first because you're in charge of programming that thing. So if you don't know how to trade, you won't be able to program it. So it's very important that you learn the manual way to do things, the old-fashioned way, and then once you know how to move your stops, and we teach all that in the live room, once you learn how to do that stuff, then you're able to then program the currencies that you want to trade, and then it will manage it for you. You go to bed. What? In fact, for me, my trading, I've only seen about 5 trades actually seen them actually go to their target in this whole year. Only about 5 trades. Why? Because I don't watch them. I don't need to watch them. I find the target, I commit to the trade, and I let my winner run. That's what you got to do.
That's one of the most important lessons I think that you could ever teach.
Well, it's repetition too. You see, if every day you're hearing that, and somebody's sitting there like me, a drill sergeant, saying, "Don't click that sucker out," and you finally do that, we play some music that forces us to remember what to do, and if you just hear it day in, day out, ultimately you end up losing all your bad habits and start replacing them with good habits. The definition of insanity is expect a different result with the same methodology you're using. You've got to change your methodology. All right? You can't expect a different result unless you do it.
Let's talk about your time frames real quick. Someone's asking why the 240, and then I have Blue Lou asking what time frame do we find the past support and resistance in?
It's in the 240-minute chart, Lou, and the reason we trade the 240, we watch the 60-minute, right? Because the big boys are trading the 240 and the 60. Now the George Soroses and the Warren Buffetts of this world are trading the day and the week and the month. But the average hedge fund is in the market every single day, trading the 240-minute chart and entering and exiting on the 60-minute chart. Right? In fact, this little white dot you see here, that comes from the 60. We go down to the 10-minute chart, and we're down here. This actually is money pouring in from the 60-minute chart. That's the big boy entering right there. That white dot right there. Right there is where he's entering. There's where he's entering to the downside. This information Jerry programmed, he's watching a 60-minute chart and bringing it down here on the 10-minute chart. Why do we want to do that? Because we can afford the stops as a retail trader on the 10-minute chart. We can't afford the stops on the 60. The stops on 60 minute maybe 100, 150 pips. Down here they're 30, 35. So that's why.
Good old Jerry, always making us money. Now, I got a question from, okay, Joe, what does it cost after 3 months? After the 3 months, I'll get back to the packages in a second. After the 3 months, there's a package deal if you're a student that you can get the charting software and the live trading room for, it's like $300 a month, right, Scott?
That's correct.
That's after the deal that you get today, okay? So we'll take a look at that, a peek at that in one more second. Does this also work, and this is from Sandu, does this work for day trading E-mini as effective as Forex?
It does, and we actually we watch the Dow and we watch the S&P 500. We also trade gold. We make a lot of money on gold. Now we don't trade gold in the United States with leverage anymore, but we have a lot of traders who do the ETFs, and you can see we got a big opportunity up here. Can everybody see this big opportunity on silver right here? This is silver. Wow. All right, and we've been trading this. We hit every target last week. Every single target we hit last week. You can see them. Bam. See what they did? Yeah, every target we hit last week. Traders made a ton of money on it, on silver. Yeah, so you can trade it on it works on anything that is tradable. All right, technical analysis is the way the market moves. You want to go trade pork bellies? Do the same thing. So yeah, it works.
All right, I got a couple more people asking about packages. I'm going to pop back over here before we end tonight and show the packages one more time, folks. So if you're asking about the pricing and everything, I'm holding that back up right now. There you go. So you have the student package, and to recap one more time, the student package, the intro. So you get the intro to Forex target trading, which is their course, 6 video lessons. You get a Forex trading ebook, the pattern recognition trainer, right, that he was just showing, and then 1 month of the chart subscription. So the charting software that Scott and Jerry have, you get 1 month of that. That's regularly $330. You're going to be getting it for $149 with the coupon code LEARN. Now, if you're looking to get your hands dirty, if you're looking to actually start trading with them in their community, that is, I mean, since it's been around since 2003, they have people that have been around with them for that long. If you're looking for that and to start, I shouldn't say start. If you're looking to find something that can help you stay profitable consistently, right? We've talked all week about, a blip here or a couple of good months here, but you can't string them together. If that's what you're looking for and you want to do it and you're dedicated, you need the PIPS or the fast track package, okay? The PIPS package is going to get everything that has a student package, except you're going to get 3 months of the charting software, 3 months of the live trading room, okay? And you saw those results from the live trading room. That's not Scott and Jerry's results. Those are his students' results, okay? That's typically $2,400, 2430. Today it's only $799, and the code is PIPS. Code is PIPS, coupon code. And everyone that's asking for the link, it's in the chat right now. Just look for the package name, and it's in the chat for the GoToWebinar. Just look for the link. And then the fast track package, now you get an entire year, and the $17,000 is almost worth it for the entire year for both the charting software and the room. But now you also get the weekly workshops, the intensive 3-day workshop. Scott, you only run that so often, right?
Yeah, we don't do it that often, but the nice thing is once you're into the package, you're automatically in on all the daily stuff. And then when we do it, let's say we do it in 3 weeks or a month from now, we try to do them, not every day kind of thing. They're exhausting, but but we try to do them close enough because remember our fast track traders can go through it as often as they want to. So every time you go through it, once again, it's reinforcement and repetition. So we do them anywhere from 4 to maybe 6 times a year. All right.
And then that package, and then, the daily market analysis session. So before the New York session, you're getting daily analysis from Scott before you guys jump into the live trading room, and that's just for the fast track members. That's typically $17,230. Tonight, it's just $2,999. $2,999 fast track. Now let's go back to their students' performance. Go back to what their students are actually doing. Look at this is the first half of 2012. First half of 2012, you already had 8,000 pips. That's it. You're done. You got it. Second half of 2012, and the year to date 2012, you have 19,545 pips. Now, mind you, that's not as high. That's not the best student. That's the average. That is the average student. Looking at the results for 2013, just from January to May, they made 10,000, right? All the way through August now, the doldrums this week, that's what August is, 27,000. Now, Scott, it's the doldrums because we don't have as much volatility, right?
Well, it's the doldrums because Europe's on vacation, right? So a lot of traders in Europe, and so they're down in the south of France, and the traders in New York are getting their last vacation in the Hamptons done.
What how many weeks did they take off in Europe? Like 6 or
They
something?
take a month off. They take the whole
Wow.
month off.
Wow, I haven't taken 3 days off in like 5 years, so I
Yeah, I
really
know. Me neither.
All right, guys, we are over. We are almost 20 minutes over our allotted hour time. Scott, as always, man, it was a blessing meeting you and Jerry in Dallas 2 years ago. I shared you guys my vision for what we wanted to build, and now we're here 2 years later with you in a webinar wrapping up the first ever Marketfy Education Week, and man, I can't be more thankful.
Well, we feel the same way. It was one of the best things that ever happened to us was running into you there, and I'm just so glad that we kept this relationship going. And the best thing is that we're all here to help traders. That's your goal. That's our goal, and you can't go wrong if that's your goal.
You got to find the good guys, and man, I'm telling you what, that was funny thing. That was one of my first ever trade shows too. So that was and I remember Jerry standing right across the aisle from me. He's got his long hair, and I was like, I got to go talk to that guy. He looks like a crack up, and it's been a roller coaster ride since. So I love you guys. I appreciate the seminar tonight and taking the time to teach all of our traders. That's going to wrap it up, folks. We really appreciate it. Again, get into those student packages. You see what they can do for you. They see what they can make for you. Make sure to take the next step. Give the time, make the dedication, and let's make this happen. That's what we're here to do, to make you a better trader, okay? Everybody, thanks for coming. Yes, Zolt, the recording will come out tonight. Yep, that'll also be out tonight. We appreciate everybody showing up. Again, you'll get the link to all 4 recordings. That's going to do it for us this week. Thanks for joining. We had so many people out, over 3,400 traders. That's amazing. That really is amazing here on our year anniversary at Marketfy. So, again, I'm Kyle Bazzi. We appreciate everybody. Rupert, Sheila, Patricia, Zolt. Really appreciate you guys. Joe, Marcus, Bruce. Thanks for coming, guys. We'll see you guys on the flip side and at the open tomorrow morning.